One of the areas in which marginal costing concept can be applied to decision making is deleting of a segment. When a segment, including a type of customer, geographical location, channel of distribution, or a product, is operating at a loss, management may be thinking of closing down the segment. Okay, this means that the only reason that we make management to be contemplating of shutting down a segment is if that segment is operating at a loss. Therefore, in analyzing the segments, you need to compare, you need to take into consideration, or you need to examine critically the economic perspective as well as the qualitative perspective of the affected segment. The focus should be on the affected segment. So, what is the quantitative perspective of the decision to be taken? Under the economic angle of the affected segment, the most important thing to do is to compare the sales value, that is cash inflow, with the associated relevant costs, that is cash outflow of the affected segment, whether it will result in a positive or negative contribution to the organization using income statement or contribution margin approach. That is what you need to do. Under the quantitative perspective, I said the most important thing to do is to compare the sales value with the relevant cost of the affected segments, whether it will produce a positive or negative contribution to the organization. All right, using income statement or contribution margin statement. Of course, the format below can be used to do that. Okay, so when you want to determine, you want to carry out the economic analysis of the affected segments. So using the income statement, your focus is on the affected segment. All other profitable segments of the organization should be ignored. The focus should be on the affected segment. So you create a column for the credits and the debit side of the affected segment. The first item here will be the sales value. You want to compare, under the economic analysis, you want to compare the sales value versus the relevant cost of making the segment, whether it will produce a positive or negative contribution. So you put down the sales value there. Then you now compare with the relevant cost of the affected segment. So the first item will be direct material. Okay. Direct labor, direct expenses, variable production overhead. You can also have opportunity costs. The opportunity cost is the benefit forgone as a result of taking a particular course of action or as a result of the decision taken. Then you can also have direct, specific, or attributable fixed cost. Direct, specific, attributable fixed cost. If you have incremental fixed cost, it's also relevant. So you add up all the relevant costs, add them together, then you less from the sales value to have either positive or negative contribution. Then after this, after your economic analysis, you need to consider the decision rule. Therefore, what's the decision rule? As far as deleting of a segment is concerned, what's the decision rule? Number one, if positive contribution, do not delete. Why you don't want to delete? This is because the segment is contributing positively towards the recovery of the company's general fixed overhead. Okay, general fixed overhead and net profits. So that's why it is advisable not to delete the segment. Once it is positive contribution, they should not delete it because the company has already incurred the general fixed overhead. This fixed overhead will need to be apportioned, okay, to all the relevant segments. Therefore, if it is positive contribution, then you should not delete it. Decision rule number 2. If negative contribution deletes. Why should they delete? This will then improve or increase the company overall bottom line, that is net profits, because a negative contribution will impair the bottom line of the company. So once you remove the segments, the overall net profit of the organization will improve. Okay. Number 3, if zero contribution, that is sales value or cash inflow equates the relevant cost, equate the total relevant cost. In this case, what should the company do? So the company can either delete or not delete, depending on other qualitative factors. Okay, so this is decision rule as far as deleting of a segment is concerned. All right, so after you have carried out the economic analysis and you have either positive or negative contribution, you need to advise. So in your decision rule, if it is positive contribution, you advise that the segment should not be deleted because it's contributing towards the general fixed overhead, towards the recovery of the company's general fixed overhead and the net profit. But if negative contribution, the segment should be discontinued. All right. And that will then improve the overall bottom line of the organization. It is also possible that the sales value may be equal to the total relevant cost. When this happens, the company can either delete or not delete the segment, depending on other qualitative factors. So what are the qualitative factors to be considered? What are the qualitative factors to be considered as far as deleting of a segment is concerned? Number one qualitative factor is the impact of the closure decision on the company's turnover, vis-a-vis if the affected segment is jointly demanded with the company's other products. Okay, say for example, product A and B are jointly demanded, meaning that the two products must be used together. So if the company is not producing product A, then it will affect if the company it will affect the sales of product B. All right. So this is what we are talking about. So the company must consider the impact of the closure decision on the company's overall turnover, especially where the affected segment is jointly demanded with the company's other products. Then number two, the effect of the closure decision on the company's reputation should be taken into consideration. Number three, the perspective of the company's shareholders should also be considered. As the company management seek alignment of the shareholders, it may also be that it's one of the shareholders that introduced the segment. Therefore, it is important that you consider the perspective of the shareholders before the final decision is taken. Then number four, the reaction and interpretation of the closure decision by the company's creditors should also be taken into consideration. The company has borrowed money, uh, and then of course the company, it's also possible that the company has received goods on credits. So what is the reaction of the creditors or the lenders? So all of this should be taken into consideration. Then number five, the impact of the closure decision on workers' morale, especially as it affects productivity. All right, because if the segment is finally closed down, certainly it will affect workers' morale. The workers that are currently operating in other segments of the company may become apprehensive of job loss. As a result of that, the company should consider how it's going to impact, how that closure decision will impact productivity. Then number six, how will the company manage the negativity that may arise as a result of the closure decision? All right, how will the company manage the negativity that will arise as a result of the closure decision? What do you mean by negativity? It is possible if the company has union, workers' union, they may rise up against the company, they may protest as a result of the closure decision, and that may damage the reputation of the company. It can also result to litigation. So before the final decision is taken, the company should consider how they are going to manage all negativities that may arise as a result of that. So another factor is, instead of outright closure of the segment, can the resources, including man and equipment, be redeployed to other profitable venture? All of this will need to be taken into consideration. So these are some of the factors that needs to be considered as far as deleting of a segment is concerned. So briefly, what we just discussed so far is that, of course, the deleting of a segment is one of the areas in which marginal costing technique can be applied to decision making. And we said that deleting of a segment will arise if a particular segment is operating at a loss to the organization. Therefore, the company may be contemplating to close down the segment. So, and then, of course, we said that deleting of a segment should be analyzed in two perspectives, the quantitative perspective and the qualitative perspective. Under the quantitative perspective, all you need to do, the most important thing to do, is to compare the sales value versus relevant cost of making the affected segment, whether it will produce a positive or negative contribution to the organization using contribution margin approach or income statement. Then the decision rule under the economic analysis is that if it is a positive contribution, the segment should not be deleted because the segment is contributing positively towards the recovery of the company general fixed overhead and net profit. Then 2, if it is negative contribution, the segment should be discontinued, and this will then increase the overall net profit of the organization. And we also said that the number 3, where there is zero contribution, that is, the total sales value equal the total relevant cost. So in this situation, the company can either delete or not delete, depending on other qualitative factor. And I mentioned the qualitative factors to be considered. All right. So of course, as you are aware, the qualitative factors are those factors that cannot be expressed in monetary terms. Okay, so that is basically that. Now let's have an illustration. Let's have illustration to that effect. Okay. Let's have this illustration. Okay. Adigbolija Limited produces 3 brands of tire, including Michelin, Dunlop, and Pirelli. The company's recent income statement produced the following operating performance. Okay, all figures are assumed to be correct and as given. The company is contemplating dropping the sales of Dunlop. Something should call my mind. Examiner has told me that the company is contemplating dropping the sale of Dunlop due to its poor profit performance. The management believes that increasing selling price will adversely affect profits. However, it has been established that 50,000 of the fixed costs of Dunlop are direct fixed costs. Okay, direct fixed costs is a relevant cost, which will be saved if production ceased. All other fixed costs will remain the same. Required. Should the company drop the sale of Dunlop? Okay, so this is calling my mind. That means that this question relates to relates to deleting of a segment. Then number B, suppose, however, it is possible to use the resources realized by stopping production of Dunlop and switch to producing Bridgestone tire, which will sell for 500,000 naira and incur variable cost of 300,000 naira and extra direct fixed cost of 60,000 naira. Will your yearly decision in A above remain the same? Then number C, what are the qualitative factors that the management of Adigbolija should consider? That is the question. So in the A requirement, you are to advise whether the company should drop the sale of Dunlop. Under this situation, what are you supposed to do? Very simple. Just compare the sales value versus the relevant cost of making Dunlop, because affected segment is Dunlop. You are less concerned with Michelin as well as Pirelli. Our focus is on the affected segment, which is the Dunlop. Therefore, you compare the sales value of Dunlop versus the relevant cost of making Dunlop, whether it will result in a positive or negative contribution to Adigbolija. Okay, to Adigbolija Limited. So let's have the solution. So like I said, you then go back to the question. Your focus is on the affected segment, which is Dunlop. You are going to pick what is the sales value of Dunlop. Okay, so that's the sales value of Dunlop. You put it there. Then you now compare it with relevant cost of making Dunlop. How do you determine the relevant cost of making Dunlop? Examiner has added everything together: the direct material, direct labor, direct expenses, variable overhead. Everything has been put together in the variable cost. So variable cost of producing Dunlop is 250,000. So that's the 250,000 there. I will go back to the question if I'm given additional information that relates to any other relevant cost in the question. So examiner has told us in the question that, however, it has been established that 50,000 of the fixed cost of Dunlop are direct fixed costs. Direct fixed cost is a relevant cost. If it is direct, that means it's directly related to that fixed cost of 50,000 is directly related to the production of a Dunlop. So we are told that out of the 180,000 fixed cost, 50,000 of it is a direct fixed cost, which will be saved. Okay, which will be saved. So if that is the case, direct fixed cost of 50,000 is a relevant cost. That's it. So no other cost again. Then you add everything together, that will produce 300,000. So the sales value of 400,000 minus the total relevant cost of 300,000 will produce a positive contribution of 100,000. At this point, we need to advise. Remember, examiner is asking you whether the company should drop the sale of Dunlop. Then our advice should be that Adigbolujá should not drop the sales of Dunlop since it is contributing positively toward the recovery of the company's general fixed overhead and net profit. The net profit will fall to a loss of 100,000 if the company ceases producing Dunlop. Okay, because if his companies stop producing Dunlop, this contribution of 100,000 naira will be lost as a result of that. So the loss of 100,000 represents the positive contribution that Dunlop generated towards the recovery of the company's fixed overhead and then the net profits. So that answers number A requirement. Because we have a positive contribution of 100,000, our advice is that the company should not stop or should not drop the sale of Dunlop. Then requirement number 2, we're now told that suppose, however, it is possible to use the resources realized by stopping production of Dunlop and switch to producing Bridgestone tire, which will sell for 500,000 naira and incur variable cost of 300,000 naira and extra direct fixed cost of 60,000. Will your yearly decision in A above remain the same? Under this circumstance, what the examiner wants you to do is to prepare income statement for Bridgestone tire. Okay, prepared income statement for Bridgestone tire. Then you now compare the contribution margin of Bridgestone with the contribution margin of Dunlop tire. So any one of them that has a higher positive contribution, then that should be your decision. So let's check. So in the B part of the requirement, the most important thing to do is to prepare contribution margin statement for Bridgestone and compare with the contribution margin with that of Dunlop. The option with the higher contribution margin should be selected. So we prepare the income statement for Bridgestone. Examiner has told us that 500,000 naira will be received. Okay, we are told that 500,000 naira will be received for the sales of Bridgestone. Okay, and then the variable cost of 300,000 and direct fixed cost of 60,000, that's 360. Okay, so variable cost of 300, direct fixed cost of 60,000, then total is 360. 360 minus sales of 500, there's a positive contribution of 140,000. Then what should be our decision? Of course, our decision should be that Adigbolujá should switch resources of producing Dunlop to producing Bridgestone to earn extra contribution of 40,000 naira and increase the net profit to 90,000. That is current profit of 50,000 plus extra contribution of 40,000 from the current 50,000. So that is our decision, because the production of Bridgestone tire generated a higher positive contribution of 40,000 naira relative to the production of Dunlop tire that generated a positive contribution of 100,000. So there is an additional profit of 40,000 naira that will be earned. So this additional 40,000 naira profit, you add it to the existing profit of the organization. The existing profit of the organization is 50,000. This is the 50,000 that you have here. So that will be a total profit of 90,000. So if the company stop the sale of Dunlop tire and switch resources to producing Bridgestone tire, the total overall profit will then increase to 90,000. So which is better? Then number C part of the question, you are asked, what are the qualitative factors that the management of Adigbolujá should consider? All right. So whenever you want to state on the day of your exam, if you are given a question under deleting of a segment or in any other areas as far as short-term decision is concerned, your qualitative factors should be linked with the question. You need to relate your qualitative factors with the question. Don't make it too generic. Don't just memorize the qualitative factors and dump it for your examiner. No, you need to relate with the question. So in this number C requirement of the question, you are required to state the qualitative factors that the management of Adigboluja Limited should consider. Okay, to do this, Adigboluja will need to consider other qualitative factors in addition to the economic consideration before the final decision is taken. Some of these factors include, number one, what will be the effect of dropping the sale of Dunlop on the customers? Is there any possibility of loss of revenue due to low patronage by the customers as a result or as a direct consequence of the closure? All right. It may well be that some of the customers, they prefer Dunlop tire. So if you discontinue producing Dunlop tire, then that may affect the patronage. It may result to low patronage by the company as a direct consequence of the closure. Then number two, after the closure of Dunlop, would the affected workers be redeployed to working under Bridgestone or be retrenched? Is the company going to sack or retrenched the affected workers, or they are going to be redeployed to working under Bridgestone? So this decision will need to be made. This factor will need to be considered. Then number three, would there be additional costs to be incurred for training and retraining of the affected workers if they are eventually redeployed to working under Bridgestone? So if you decide to redeploy the current workers that are operating under Dunlop, then will the company incur additional cost for training and retraining those staff for them to be able to operate the machine under the Bridgestone? So all of this will also need to be considered. Then number four, to what extent would dropping the sales of Dunlop affect workers' morale? Other workers currently working on Michelin and Pirelli may become apprehensive of job loss, and this may affect their productivity. That's number four. Then number five, how would Adigboluja manage any negativity that may arise as a result of closing down or as a result of dropping the sale of Dunlop? This is because there may be litigation or unionism as a result of closing down or dropping the sale of Dunlop. So these are the factors, some of the factors that you need to take into consideration. I've given you five. All right. So that is that. And that's end of the question. That's the end of the question. Is very straightforward. No matter how big is the question, the principle and the concept remain the same. Under deleting of a segment, the most important thing you need to do is to compare the supplier's quotation, is to compare the sales value of the affected segment with the relevant cost of making the segment, whether it will result in a positive or negative contribution. So this is the end of the question.